to BLOCKTV. It's time now for Chain Breakers. Grayscale Investments, the world's largest digital asset manager, has released its quarterly report showing that it took in a cool $255 million in Q3 of 2019, with 84% of that investment originating from institutional investors, breaking Grayscale's previous record for fundraising in a single quarter. And I speak now with Ray Sharif Askarai, Director of Sales and Business Development at Grayscale. Ray, thanks so much for being with us.
Thank you for having me on.
All right, so to kick off, I want to know, so Grayscale Investments, as we just heard, took in a record figure in Q3 2019. What do you attribute this massive growth to? What do you think was the key driver here?
I think we were really fortunate. We had a tremendously encouraging quarter. And given the fact that we're the world's largest digital currency asset manager, it's safe to say that some of these trends represent the broader picture beyond just Grayscale. So I'd focus on three things. First, as you said, the increasing demand from institutions, which has been growing meaningfully in the last few quarters, actually has certainly played a role. I think we're seeing more and more traditional investors, hedge funds, look for sources of diversified alpha, and in doing so, look to digital assets. I'd also highlight our Drop Gold campaign, which we launched in May, which has served not only to elevate brand awareness around Grayscale, but also really create more awareness around Bitcoin as a legitimate investment vehicle.
Yeah, certainly.
And then lastly, sorry, one more.
No, of course.
I'd also actually focus on the fact that we have three products publicly trading now. So we got public quotation for Ethereum Classic Trust. So three things have been trading on the OTCQX. And just earlier this week, we got FINRA approval to have our digital large cap fund start trading. So this is going to be the first tradable security that gives investors access to a diversified basket of digital assets.
And now, I mean, as you just touched on there, while Bitcoin was far and away the biggest individual component of the record cash inflow, Grayscale's other digital products also made up around $100 million worth of investment, according to that report. Given the relatively poor showing, however, of altcoins in Q3 2019, do you expect to see that sort of continued growth in the altcoin sector as well, or do you think Bitcoin is going to be the main market driver moving ahead?
Look, we had flows meaningfully into Bitcoin. We had flows into altcoins. I think it's important to take a step back and look at the bigger picture and the broader trend. The fact that we have been over time moving away from Bitcoin maximalism, where Bitcoin represents a safety asset in the space, a flight to quality asset, shows that investors are more comfortable diversifying beyond just Bitcoin and is really positive. In Q3, we had about a third of our flows go into products that were not Bitcoin. Whereas looking back to Q2, that number was about 25%. And in Q1 of 2019, it was just 1%. So I think as we see a more balanced demand picture, it's indicative of a longer term trend that is positive around the space and encouraging with respect to traditional investors continuing to embrace this new asset class.
And certainly there has been an embracing in some fields, but while H1 2019 was certainly a strong showing for cryptocurrency as a whole, I'm talking now about the market as a whole, Q3 did end up being a bit rougher, let's just say, with some significant market drops. And do you anticipate that the same record growth and interest from institutions will continue towards the end of the year, looking into Q4 and the end of 2019, given the fact that we've had this distinct pullback in the market coming into the second half of this year?
I think our investors are focused on the long term. I do.
Yeah, certainly it does play to have that long-term advantage. And I suppose those institutional interests in crypto are more likely to look at that, and that's where you guys, I suppose, come in. I mean, looking to that macro, do you believe that institutional interests in crypto really are stable and growing, particularly given this ongoing volatility in the market, which saw such huge spikes in the first half of the year and now a bit of a pullback?
Again, I do think it's less about the day-to-day movements and volatility. I think, for example, when you think about how much money we raised this past quarter into our private placement, which is available to accredited investors. It has a statutory 1-year hold. I think that speaks to the fact that investors are not as focused on the day-to-day price movements. These are investors that have global perspective. They're focused on the broader, longer-term investment horizon. And these are the kinds of investors that we do continue to see coming into the space.
We're seeing these guys come into the space, and you even say in your own report that the majority, and I quote here, the majority of this quarter's investment capital came from institutions, with 84% of inflows coming primarily from hedge funds, end quote. Have those same hedge funds begun to believe in the narrative of Bitcoin as a safe haven asset in accordance with your own data? I mean, does Bitcoin serve to protect against the times of economic volatility, which regular equity markets have sort of been flirting with over the course of 2019?
Certainly. I mean, we have long thought of Bitcoin as a hedge, as an asset that not only, given its exposure to the upside associated with technology, performs well in favorable economic conditions, but it also has shown to perform well through volatility, in periods of liquidity crises, and it's extremely encouraging to see more and more investors also embrace this narrative.
I mean, the investors may be sort of embracing the narrative of a hedge against the standard market, but is it falling in line with gold in terms of that safe haven? Is your data seeing that it's actually being considered a risk-off investment, as perhaps your marketing would suggest is sort of the comparison?
I think it has, the unique thing about it is that it has that characteristic. It has the flight to quality, store of value characteristics, as well as having the upside associated with the technology.
And now, as well, it'd be remiss of me not to ask, as well, a couple of weeks ago we had the launch of the backed futures market that took place, a bit of a lackluster affair where there wasn't a ton of volume, still struggling from a lack of volume in that market. A lot of people have spoken about Grayscale and the fact that your Bitcoin trust sees considerably higher volumes than Backed has at the moment. Do you think something like that, many saw it as a sign that institutions aren't as interested in crypto as people originally thought, as Backed and ICE, their parent company, might have thought? Do you agree with that idea, or do you think there's something they're just not offering those institutional investors?
I think, first of all, we're just thrilled to see more and more of the legacy players get involved in the space. And I think that these things take time. These products take time to develop. They're focused on a specific subset of the market. And, we have to all keep in mind that Bitcoin as an asset class has been around for 10 years.
Yeah, certainly, it is still a young market, plenty of development still to be done, and I'm sure Grayscale will be there at the forefront of much of that development. Ray, I want to thank you so much for taking the time to speak to us today at BLOCKTV. A fantastic third quarter for you guys. Look to see how the rest of the year plays out. So thank you so much for joining us, and stay with us at blocktv.com for all the latest in news and developments. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.